type trading phenomena for a while, but then we had a situation where we probably want to take a look at what is going on here with this turn. And on this particular day, on September the 1st, as I said, we started to have a little bit of a downturn of the predicted moving average. So we are looking kind of at a point to get short. The predicted low that we are using here on August the 30th, a couple of days ahead of that September 1st turn, but on August 30th was 144.21. And I'm using 100 points. Again, you might wonder where that number comes from. It is pretty much a rough approximation of the average daily range over a period of time. Now, during that volatile period, it probably should be larger. Some other times it should be smaller. But I use 100 points as my point in which I would enter if market drops 100 points below the predicted low. So that means that with the predicted low of 144.21, that the sell point would be 143.21, and that part was hit on September the 1st. Would have gotten you into the short position that you were looking at. Again, you note that it does coincide with this crossover, this turn down in the predicted exponential moving average below the actual moving average. So you have your crossover, you have your previous highs that are fading on the market, providing some resistance. You have the predicted low providing a point at which you can enter based upon the other clues that you have. And of course, when you look down below, you can see what has happened. The predicted differences are definitely pointing down, a weakening type of situation, and the neural index is sitting at 0, which indicates that physical price will be lower in 2 days than it is today. So you put all those together, and you're looking at a situation where the market, should head lower. But we're making only short-term forecasts. As soon as I say that, the market could turn. You could have a dramatic move to the upside. So, any comment that I make, as Darrell indicated, do not take as a recommendation, take as a concept, a study type thing to take home and analyze yourself. In this particular case, when we sold at 143.21 on September the 1st, since then the market, it's had its moments, but it has dropped down now below 139. If that market does start to turn back up, we're going to keep a stop above the lowest predicted high. The lowest predicted high in this case was at 141.40, and so that means we're going to add 50 points onto that number. Again, half of the trading range for a reversal type of situation, but the stop be at 141.90 if it does turn around. So far, that short trade is looking pretty good, but again, no guarantees, no assurance that it's going to last for a long period of time. Okay, now let's move on. Again, just a couple of markets for those people who are grain traders, and look at the market from corn is kind of the indicator of the market because of everything that's going on with the corn market. We look back at the corn market, you can see that we're definitely in a dying mode for quite a period of time. We had the downtrending, existing here for about a month or so. You get down here to the acreage report that the U.S. Department of Agriculture released, and then from the 1st of July on, it started to move up. We had us over in the corn market right here in early July, the moving average crossover study indicating a shift to a long position or an uptrending type of a market. To continue, well, we all know that the market has continued to move higher and higher. We've had a couple of little blips down here below, but in an overall direction, again, you would probably still be long that market because you'd be moving into a traditional technical analysis. You'd be having stops below previous notable lows, and would still be long that market the whole time until you get to the current time frame. Now, you have to also be aware that not only when you look at this market, when you see that this candle here has made a turn, when you see that the predicted moving average here has dropped it below the actual moving average, you can see the predicted differences are moving down. You can see the neural index has dropped to a reading of 0. All might suggest some bearishness, but when we look at the corn market, we have a situation coming up Monday. U.S. Department of Agriculture releases its next crop report. Based on field observations, the Pro Farmer Tour survey, based on other surveys, everybody is calling for the market, and the food market for that matter, to be considerably lower than what USDA indicated previously. Now, will USDA drop the production estimate that much? It's really hard to say what the USDA will do, because sometimes they tend to kind of work the numbers down instead of making the rapid adjustment. So you have a situation where corn could be limit up or limit down after the crop report on Monday, and probably neither would be a surprise. That means that here we have a market that may indicate down. You might want to venture into it, but probably, for safety's sake, if you're adverse to risk, probably a stand-aside situation, because even if you did put a stop in at a logical point, if it makes one of those limit moves, it's going to fly right through you, and you won't be on board where you think you want to be on board anyway. So, just kind of a word of caution to when you look at the move, the corn and reliance. Some of us, you have to do so, but keep in mind, again, the common sense factor. What is the surprise that could occur that could knock your argument all to pieces? I just threw McDonald's in here to show you that it is also has its moving averages, has the predicted difference, where the line, the predicted medium-term moving average moves above the predicted long-term difference, and you can see that on the chart above, on the price chart above, how the price shot above the predicted high, moved higher. You can see that the moving average has been up, ever since, first of all, we had the move down. You recognize this little down move here in the McDonald's stock, that when everything else was kind of falling apart and everybody was going, well, McDonald's also had a little bit of a slump, but it dropped maybe $5, a fairly small amount. It's kind of one of those bellwether types of stocks that you want to have that produces dividends and so forth. Stay pretty strong, pretty solid. So, one of those stocks on which you want to build a good core position. And it dropped $5, but then since then, rallied another $6 or $7 and moved to another high. So we have a situation again with McDonald's, kind of like corn in a little ways. I don't know that it follows corn, but where you have the predicted moving average has dropped below the actual moving average. You have the predicted differences turned down, but you have another little, fly in the ointment here, in that the Neuro Index has moved up to 1, suggesting the typical price in 2 days will be higher than it is today. So, puts you in a little bit of a dilemma how to trade this one. So the only way you can do that is to look at your predicted high, look at your predicted low, determine what has been your average daily range, and I think it's, let's say we'll use $1, buy $1 above the predicted high that you see there. If you see that predicted high, buy $1 above that. Even though the market has gone up, it may seem like a risk, or sell below that predicted low if you are a stock market seller. Any of those types of ideas that I've tossed out here, again, I want to make sure that they understand that they are not recommendations.